Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Thursday, April 21st video is sponsored by Realtic. All right, folks, what we're going to do is get right into the charts today. As we get into the analysis portion of this video, I want to just make it clear today is the last trading day of the week. Remember, tomorrow is Good Friday. The markets are closed. Therefore, today you have holiday volume setting in. The initial open today was a nice gap up. The markets faded off that with a little bit of profit taking. And then again, what we saw is right around 11 o'clock or so, the markets just started to float neutral to higher. And that's what we're doing today into this resistance just around the 133.80 level. And again, 133.80 is a key trend line right here. If you want to see exactly where this comes from, just extend the charts all the way out. And you can clearly see this pivot high right back here, there, and then right there. That's why you're hitting this resistance at 133.80 or so. All right, and again, that's what the market gapped up to. You had a nice little short opportunity. We talked about that in the intraday stock chat today off of that level. The market's faded down right into this little greenish, this bluish area. And from that point on, the light volume really set in. You can see the volume's getting lighter and lighter. That's holiday session volume, and the markets off of that are floating neutral to higher. I wouldn't be surprised, and this is a call I made yesterday. We'll find out if I'm correct today, but I would not be surprised to see the spiders, or I should say the Dow Jones Industrial Average, close above 12,500. And again, from the things I know about this market, folks, it's just a normal kind of thing going into a holiday session and a holiday weekend where you have a 3-day weekend before the markets reopen. They like to close the markets above a master level. 12,500 would give a perfect pumping opportunity to the media for 3 days, not just 2 days. And again, what do we know about the holidays? People take vacations. If the markets are up and they hear about a great day in the markets closing above 12,500, great earnings from the likes of Apple Computer and Qualcomm and a couple other players like GE, then obviously people are going to be more likely to spend money, which obviously stimulates the economy. So there's a concerted effort out there, there's no doubt about it, to on certain days, certain ends of weeks before holidays, get the markets to close above key levels. All right, again, what you can see here, you have your 133.80 level on the SPY. This again mirrors the S&P 500. I want to take a look at what's going on. You want to know one other reason besides some decent earnings why the markets are up? I'm going to show you right now. Take a look at the dollar, folks. Dollar again getting hammered down today. The 3-day drop on the dollar has been huge now. If you go back to basically on Tuesday. Here's Tuesday, Wednesday, and then today being Thursday. Look at the move down. Basically, the close on Monday on the dollar was at $21.66 on this Realtic chart of UUP. UUP is the ETF for the dollar. So it closed at 21.66, and today, where are you trading? 21.22. That's basically a 44-cent drop in 3 days on the UUP. That's a huge drop, folks. Almost a 50-cent drop on an ETF that tracks the dollar. Basically, percentage-wise, I mean, it's just ginormous if you think about it. It's basically a 2% drop in 3 days on the dollar. 2%. I mean, think about that. Your currency that you hold in your pocket, if that dollar was worth $1 3 days ago, it's now dropped to 98 cents in value. I mean, think about that in terms of what you have in your pocket. You have $1 million, you have $1,000, whatever it may be. That now amount of money will only buy you that much less. 98 cents to every dollar just in 3 days. And just think about it like this, folks. If you go to the daily chart of the UUP and you go back to the beginning of the year, you were at 23.40. Now you're at 21.20. 23.40 to 21.20 is a humongous drop. All right. And again, we can just take a look at overall. Let me just calculate it out right here as we do the video. If we subtract 21.20 from 23.40 and then divide it by 23.40, you get a sizable percentage. I mean, you're talking about 10+% easy drop in valuation. That means your dollar is now, from the beginning of the year, only worth essentially 90 cents or so, even a little bit less, actually. All right, in any case, that's the reason for the market being up along with earnings. You got good earnings out of Apple Computer, out of Qualcomm. GE had good earnings. I mean, there were a fair amount of good earnings across the board, and obviously those stocks are trading mostly higher. All right. Looking across the board, we obviously know when the dollar drops, what do commodities do? Commodities usually go higher. The USO, which is the oil ETF here on this USO Realtic chart, you are seeing a good uptick here. You're really looking to see if you hit this upper level here on the USO. This is going to be the ultimate level you're following, which is at $45.25. If you also look at other commodities, SLV is having another huge day. I'll tell you, this is one of the biggest moves I have ever seen in a commodity in such a short time. If we just go back to January 28th, January 28th of this year, folks, and look at the move up that this thing has had. And this is basically February, March, and April. So you're talking in 3 months, this is up literally over 100%. You're talking about close to 150%. 150%, folks. Check that. That's not quite true. But in any case, that's the way we hold it. Let me actually calculate that out as it's not quite 150. I'm thinking back from going back to September of last year. So if we take $45 minus 26, and that's 19 divided by 26, 73%. So you're talking about a 73% gain. And what I was mentioning here was if you go back to September back here and take the low of 16, then you're talking about 100 plus 50% or so gain from that move. But look at the vertical nature of that chart. It's actually interesting because you can see the one wave here and then the pullback, and then this is the second wave. Second wave is usually the biggest, they say, and then the third wave will have a sharp pullback to it and then one more push up. But the pullback should be sizable. I'm guessing at least 10% on this pullback when this thing does start to pull back. And again, silver is approaching that 31-year all-time high of about $50, just under $50 from 1981, I believe it was, when there was manipulation. If you remember, I don't know how many of you guys have heard about that story, but two brothers tried to manipulate the silver market and push it all the way up, and it actually worked. It did push it up, but ultimately it came collapsing down. I think they ended up filing for bankruptcy because they lost so much money after they tried to really just continue to push it up. And things only work so long. Just like the Federal Reserve will eventually fail at doing what they're doing here, which is printing money. It'll eventually blow up in their face. Same thing applies to pretty much anyone who tries to manipulate any sort of market, and that's what the Fed's doing. I mean, the Fed is ultimately printing money, trying to keep things down. And by the way, next Wednesday is the first new style of Fed meeting. The new style of Fed meeting means that at 12:30 they'll release their FOMC policy statement. It used to be done at 2:15, so 12:30 p.m. on Wednesday, and then at 2:15 they're going to release the minutes of the meeting, and right after they're going to have a conference call going to about 3 o'clock. So it'll be very interesting to see how that all plays out, in my opinion, how the market handles that. I may, you guys should join the Research Center, take that free trial, because I'm going to look to possibly start to short a few stocks. Right now, I'm not holding anything short in this market, which has been smart. My bias starting on Monday was for neutral to upside this week. That's been exactly what we've had. If you go to your SPY chart, you can see that pretty easily here. If you go to your 60-minute and we zoom in, here's Monday, and look at this chart since Monday. It's gone basically neutral to higher. But the point is, again, understanding what to look for and knowing not to short was smart. Now things are much higher. I think mid next week I'll begin to look and analyze some charts for some shorts. So again, if you join the Research Center and take your free trial, I encourage you to do that so you can obviously make some money here. All right, and again, that's what we'll be doing here, getting ready to short the market and see how things go. All right, let's take a look at a couple other key stocks today. What's moving? Chevron is basically on the flat line here. Now, Chevron filled a key gap. If you take a look here, look at this. Yesterday, Chevron gapped up into a gap fill level, and it's holding right around that 107.75. So that's actually resistance on Chevron. Be interesting to see if it pushes to a double top or not early next week. If oil continues up, it probably will get a little bit more momentum. But if oil gets through 115, I think it starts to fall very dramatically. So keep an eye on that price of oil. I think oil is going to be a big thing early in the week next week as oil continues to move up. Right now, spot crude is trading at 111.65 to 70 or so. So it's still about $1.50 below the highs from a couple weeks ago, but it's really not that far. I mean, $1.50 on spot crude is nothing. And you see one little pop and it'll get right there. All right. What else do we have to look at here? Chevron's having a decent day. Google's down a little bit. JP Morgan, Goldman Sachs are both up slightly on the day. Apple Computer, obviously, on earnings. Take a look at Apple here. Interesting on Apple because the chart showed us that it was into major support here, and intraday it looked like it was going to break down when it was trading down here on the 15th of April, which I believe was last Friday. And then ultimately it reversed, closed up, and that was it. It just continued to move higher. I believe that's actually on Monday, it was the 15th, but Monday the 18th, excuse me, it reversed and moved all the way up. So it'd be interesting to see how this plays out. Right now, you have to think that Apple has a chance to get back to this little double top, although I think right up in that range, you could start to see it stall out. And again, I'll be watching this chart as well, kind of analyzing. I really am interested in possibly shorting some things in this market. But again, I'm waiting patiently until next week. I want to see what type of action we get on Monday. Monday should be a very light session, assuming nothing happens over the weekend because of the holiday hangover, as they say. So we'll continue to watch that and see how things go. Let me take a look at a couple other things here. Let's see. Intel's up slightly. Microsoft's down. Dell's up a little bit. IBM's having a good day. IBM's such an interesting play because essentially what happened was IBM, after earnings 2 days ago, It fell sharply yesterday morning, right at the open, and then recovered most of the loss and has actually moved higher here. IBM is actually right into this little double top. In fact, look at that perfect little shorting opportunity that you had on an intraday basis. When you pierce that double top, this is the daily, but if we go to your intraday, let's go to your 60-minute chart here on IBM. There you go. Let me zoom out a little bit here. Look at this. Take this exact high and just drag it right across, and look at that spot. So as soon as you pierce that level, that was your shorting opportunity. All right? And bam, you made some good money on that pullback. And again, all it is utilizing understanding a pierce of a double top. You get a pierce of a double top, short it. Simple as that. And make some money. So nice little scalp trade on IBM there this afternoon. Overall, things are very quiet, though. Volume is not heavy at all in the overall market. You can see IBM turning around, although it's into the 20 moving average here. Let's go back to the SPY and just continue to scan through. Yeah, markets are slowly coming back in. You might get a little profit taking before the long weekend. I guess that's not a surprise either. But I'll still be interested to see if we ended up closing around the 12,500 level on the Dow Jones Industrial Average. All right. All right, guys. Let me just think about if there's anything else I want to cover here. But I think today is a very light volume day. For the most part, the only thing I want you guys to remember is just make sure you are taking that free trial. Start your 7-day free trial to the Research Center or the Intraday Stock Chat. What you want to do is get involved this weekend, because we're going to start putting out alerts for next week that are going to trigger, and those triggering alerts will be major trades for you. All right? There'll be major swing trades. So come join the Research Center. Come join the Intraday Stock Chat at inthemoneystocks.com. Take your 7-day free trial now. Take care, guys.